Hey everyone, welcome back to the channel. Today we're diving deep into a comprehensive analysis of AleAnna Inc., ticker symbol ANNA, a player in the natural gas space that's caught my attention. If you're looking for insights on whether this stock deserves a spot in your portfolio, stick around because we're breaking down everything from financials to valuation, performance, and more. Let's get started. So what's the big picture with AleAnna? This is a company operating in the energy sector, specifically focused on natural gas exploration and development. They're based out of Dallas, Texas, and have a pretty niche focus on delivering critical natural gas supplies in Italy while also dabbling in renewable natural gas. For a smaller player in the oil and gas exploration space, they've got some interesting developments that we'll unpack today. Let's zoom in on who they are and what they're about. All right, let's talk about AleAnna Inc. Founded in 2007, this company operates in the onshore conventional natural gas exploration space, primarily in Italy, which sets them apart from a lot of U.S.-centric energy firms. They're also working on renewable natural gas development, which could be a growth area as the world shifts toward cleaner energy. Headquartered in Dallas with just a small team of 7 full-time employees, they're lean but focused. Their market cap sits at around $320 million, and their current stock price is hovering at $7.89. Led by CEO Marco Brune, AleAnna is part of the broader energy sector, specifically in the oil and gas exploration and production industry. Now that we've got the basics down, let's dive into their revenue streams. When it comes to revenue, AleAnna's numbers are still on the smaller side, reflecting their status as a developing player. In their 2024 fiscal year, they reported revenue of about $1.42 million, which is a step up from virtually zero in 2023 and 2022. That's a positive sign of growth, though it's clear they're still in the early stages of monetizing their operations. Their gross profit for 2024 came in at $243,340, which shows they're starting to generate some margin, but it's not a huge figure yet. Geographically, their focus on Italy is a key driver, though we don't have a detailed breakdown of revenue by region or product category. Still, their niche in natural gas supply for that market could be a unique angle if they scale up. Let's see how this translates to their earnings. Moving over to earnings, AleAnna's performance tells a story of a company still finding its footing. For fiscal year 2024, they reported a net income of negative $12.34 million, which translates to an earnings per share of negative $4.39. That's a pretty significant loss, though it's an improvement from negative $5.06 million in 2023. Their EBITDA for 2024 was also in the red at negative $5.94 million, showing they're burning through cash as they invest in growth. Operating income took a hit at negative $14.55 million, which signals high operational costs relative to their revenue. The key takeaway here is that while revenue is starting to trickle in, profitability remains a challenge. They've got some work to do to turn these numbers around, but early revenue growth is a small silver lining. Let's dig deeper into their financial health. Looking at AleAnna's financial statements, there are some mixed signals. On the balance sheet for 2024, they've got a solid cash position, with $28.33 million in cash and cash equivalents, up significantly from $6.76 million in 2023. Total assets stand at $83.9 million, which is a big jump from $33.69 million the prior year. However, total liabilities are at $33.32 million, and their retained earnings are deeply negative at negative $191 million, reflecting years of accumulated losses. Their current ratio is healthy at 2.00, meaning they can cover short-term obligations, but their debt-to-equity ratio is low at 0.05, which suggests minimal leverage, a good thing for now. On the cash flow side, operating cash flow was negative $16.9 million in 2024, and free cash flow was even worse at negative $39.96 million due to heavy capital expenditures of $23.7 million. They're investing heavily, likely in exploration and development, but it's eating into their cash reserves. Financing activities brought in $62.1 million, which helped boost their cash position. Overall, they've got liquidity to keep going, but those negative cash flows are something to watch. Let's see what this means for their valuation. Now let's talk valuation. AleAnna's price-to-earnings ratio is currently negative at 46.93, which isn't surprising given their lack of profitability. Their price-to-sales ratio is quite high at 20.75, suggesting the market is pricing in a lot of future growth potential relative to their current revenue. Enterprise value stands at $316.65 millions, slightly below their market cap, reflecting their low debt levels. Return on equity is negative at -23.43%, and return on invested capital is also in the red at -8.59%, both of which highlight their struggle to generate returns for shareholders right now. The market seems to be betting on future success, but with these metrics, there's a lot of risk baked in. Let's break down their strengths and weaknesses next. Alright, let's run through a quick SWOT analysis for AleAnna to get a sense of where they stand. Starting with strengths, their focus on natural gas in Italy gives them a unique market position, especially as Europe looks for stable energy supplies. Their recent 47% increase in proved reserves to 25.8 billion cubic feet, as reported in their 2025 year-end reserve report, is a big win and shows potential for future revenue growth. On the weaknesses side, their financials are a concern. Consistent losses and negative cash flow mean they're not yet self-sustaining. Opportunities lie in the growing demand for natural gas as a transition fuel and their pivot toward renewable natural gas, which could attract ESG-focused investors. However, threats include geopolitical risks in the energy sector, as seen in recent news about tensions in Iran potentially impacting oil and gas markets, plus the inherent volatility of commodity prices. They've got a promising niche, but execution will be key. Let's check out how the stock has been performing lately. Looking at AleAnna's recent performance, it's been a rough ride for shareholders. Over the past week, the stock is up 4.4%, which is a nice little bump, and recent news about geopolitical tensions in the energy space might be driving some of that upside. However, zoom out, and the picture gets uglier, down 5.09% over the past month, 17.41% over 3 months, 36.5% over 6 months, and a staggering 70.84% over the past year. Over 5 years, they're down 73.5%. Compared to the broader energy sector, which is up 28.32% over the past year, AleAnna is seriously underperforming. Their beta is almost zero at -1.5, meaning the stock doesn't move much with the market, which could be a double-edged sword. Less volatility, but also less upside in a rallying sector. Short-term, that recent uptick might suggest some momentum, but the long-term trend is concerning. Let's dive into their intrinsic value to see if there's hidden potential. Now let's try to pin down AleAnna's intrinsic value. Given their current lack of profitability and heavy investment phase, a discounted cash flow model is a bit tricky to apply with confidence, as future cash flows are highly speculative. Instead, I'm looking at their asset base and growth potential relative to peers. With total assets at $83.9 million and a market cap of $320 million, the market is clearly valuing them at a premium to their book value, betting on future reserve development. Their enterprise value of $316 million aligns with this, but without consistent earnings, it's hard to justify that premium purely on fundamentals. So what's the takeaway from the intrinsic value analysis? Honestly, AleAnna looks overvalued at current levels when you strip away the hype. Their price-to-sales ratio of 20.75 is sky-high for a company with just $1.42 million in revenue and no profits. If they can turn their reserve growth into meaningful cash flow, there's potential, but right now, the numbers suggest caution. I'd estimate a fair value closer to 3 to 4 per share based on assets and near-term revenue potential, implying significant downside from the current $7.89 price. Of course, this hinges on execution, so keep that in mind. Let's wrap this up with some final thoughts.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, Join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.